Hey guys, it's Aman
and Christina
from Our Rich Journey. It is April and it is time for our stock portfolio update. If you have been following our channel, you know that our portfolio is going this way. In fact, it is up over $1,240 since we started the portfolio. IBM is up over 15% and many of our other stocks are all up. In fact, 8 out of 10 of them are up. On today's video, we are going to talk about the portfolio, but we are going to also answer one question in particular, and that is, how do we pick stocks?
If you've been watching our channel, you know that we are on the road towards financial independence, and our high dividend stock portfolio helps us towards this journey. This is actually just a small percentage of our investments that we make in order to reach financial independence. Our other investments include index funds, real estate, and of course, side hustles.
Oh, we love to side hustle.
So this particular portfolio is our high dividend stock portfolio, and we're averaging about 7% in dividend payouts.
So we started this portfolio in December of 2018 by investing $10,000 in 10 individual stocks. And every month we invest $833 in those same stocks with the goal of investing $10,000 every year in those stocks.
So the first thing you need to keep in mind before you decide whatever stocks you want to select is your goal. What is the goal that you're trying to achieve in terms of selecting your particular stocks?
So when we're talking about goals, we set a goal for this portfolio. We wanted to establish a high dividend portfolio that will pay us eventually $1,000 a month in dividend payments. That is our goal for this portfolio.
Now you may have a different goal that doesn't involve dividend stocks at all. You could be interested in speculative stocks. You could be interested in short-term investments. Whatever that is going to guide your selection of stocks.
So now that we've got the goal out of the way, keep that in your mind, because as we talk about these 5 different ways to pick stocks, keep in mind that each way you must apply your goal to that strategy. So the first way that people pick stocks is they let someone else pick the stocks for them. They hire a financial advisor that will pick individual stocks for them. We're not going to get into that whole discussion about financial advisors, but what we're saying is that some people feel that they don't have the knowledge or the time to pick stocks themselves, so they will hire someone else to do it for them.
The second way of picking stocks is by copying celebrity investors. People like, of course, Warren Buffett or Jim Cramer. These are people that have a lot of money invested in the stock market, have been very successful, and one type of approach is basically copying their approach.
Now these celebrity investors, they all publicize their portfolios, but you get kind of a delayed portfolio that's publicized. You don't necessarily know when they're going to buy or sell a stock. And when they do go to buy or sell a stock, the entire market moves with it. So the delay that you see in their portfolio, you go to buy that stock, but it may be too late. The move has already been made. Now you can learn a lot from celebrity investors, especially someone like Warren Buffett, because he is very transparent about what he's buying and selling and why he's doing those things. But his overall goals may not align with yours. So don't try to necessarily fit your goals into someone else's. But you can always use a celebrity investor as someone that you aspire to be like. The third way people pick stocks is by following a bragging friend. This is that coworker or that family member that talks about all the money they have made in the stock market. And you go to them and maybe they give you a tip, or maybe you ask for a tip. But the thing is, you're following someone else that is only talking about their successes.
Now, we're not saying that you should completely disregard any tips that your friends give, but don't follow them blindly. The idea is you should be able to do your research based off of any tip that you receive and decide for yourself whether or not you want to make that purchase. And the fourth way that people choose stocks are by doing this thing known as the headline picker. You watch the news and the news is saying everyone should invest in this particular stock. Everyone should sell this particular stock. These type of people follow the trends or the patterns advertised on the news outlets.
The problem with this is that these people don't really have a plan in place. You don't have any goals established or criteria for picking stocks. You're just picking whatever is hot at the moment. It could be a dividend stock that's hot. It could be a speculative stock. It could be Lyft, Facebook, Google, or Uber when it comes out. It's all of these stocks that are in the news. They're headline stocks. And because of their popularity, you want to get involved in them. And the fifth way that people pick stocks is they do their own research. Now, there is no typical way of doing this because what you prioritize when you do your research is totally up to you. And this is the way that we picked our 10 stocks, and this is the way we picked our ETFs and all of our other investments based off of the criteria that we establish, our own personal investment strategy.
Now let's talk about our own individual research that we did in terms of picking our 10 individual stocks. Now we used a lot of different criteria and we really focused it in on specific criteria that we learned from the book Intelligent Investor.
So this is the book, The Intelligent Investor. It is very old. We have been through it a number of times. I think we actually got it at the library and we never returned it, but we ended up having to pay for it anyway. But anyway, we are going to talk about that criteria from this book.
So let's go through the criteria pretty quickly. The first one is the adequate size of the enterprise or the company. The idea is that you want to pick a larger company versus a smaller company because a smaller company is more subject to volatility. The second thing is looking at strong financial conditions, where the assets are at least 2 times the liabilities.
The third thing we looked at was earnings stability. We looked at the earnings of our companies over the past 10 years and identified if their earnings were stable and if they were trending upward.
And the fourth is the dividend record. Because we're investing in companies with an idea of high dividend payouts, we are looking at uninterrupted dividend payouts for the past 20 years for each company that we select.
They always pay their money. And the fifth thing we looked at is earnings growth. And I alluded to this earlier, but we like to see if a company is making more money year after year or quarter after quarter.
And number 6 is the price to earnings ratio, where we're looking at the price of the particular company versus the average earnings that it's been making.
And the seventh thing that we look at is the stock price compared to the value of the company. It's called the price to assets ratio or the price to book ratio, but it's basically you're taking the price of the stock and you're comparing it to how much the company would be worth. And this can include things like the actual assets of the company or the value of the brand of the company. So the Intelligent Investor has been our guiding light when picking stocks. Now, all 7 of those criteria, we may not apply them to the exact T, but we try our best to use them as a guiding light. So in addition to using that as the guiding light, what we do next is apply that information to picking our stocks using stock filters.
So what Ahmad means when he talks about stock filters are specific databases where you can identify certain filters that you want to apply to your stocks. You apply these filters and then the database will spit out the particular stocks that meet all those filters or criteria.
Now there are a number of stock picking databases that you can apply these filters to and it will spit out any number of stocks. But what we like to do is use the free filters. Now, if you have a Vanguard account or some of the other brokerage accounts, they have these filters, but you can also use things like Yahoo, MarketWatch. There are a number of different online websites that you can put in this criteria and it will provide you with a number of stocks. So based off of our criteria and our stock screener, once we have those companies, we start to follow those companies before we ever make a purchase. And that's exactly what we did with these 10 companies. And that monitoring is what we use to pick our 10 stocks. After monitoring a number of different stocks, we decided on these 10 individual stocks and we bought them.
So that's how we picked our 10 individual stocks. It aligns with our ultimate goal of getting a high yield dividend payout each year. Now you may have a different goal in mind, so your strategy for picking stocks may be different. But the idea is pick the strategy that works best for you based off of your individual needs. Now, let's go through our performance of our stocks.
Oh, it's portfolio time.
So let's go over the specific dividend payouts for this month. For Maine, we got $6.24. For PSEC, we got $10.56. For GM, we got $12.92. For IRM, we got $22.61. For AGNC, we got $12.24. And for MPW, we got $19.
So that is a total of $83.57 that we collected in dividends this month.
Our first stock is AT&T. Today we bought 3 shares for $32.15 each. We now own a total of 46 shares at an average price of $29.84 per share. Our total amount invested is $1,372.64. The current value is $1,478.90, making this a total gain of $106.26 or 7.74%.
Next, we bought IBM. We bought one share for $143.61. We now own a total of 12 shares at an average price of $124.63 per share. Our total amount invested is $1,495.56. The current value is $1,720.56, making this a total gain of $228 or 15.25%.
The next stock is AbbVie. We bought one share for $81.88. We now own a total of 19 shares at an average price of $85.09 per share. Our total amount invested is $1,361.44. The current value is $1,309.92, making this a total loss of $51.52 or 3.78%.
Next, we bought General Motors. We bought two shares for $39.34. We now own a total of 39 shares at an average price of $34.83 per share. Our total amount invested is $1,358.37. The current value is $1,534.26, making this a total gain of $175.89 or 12.95%.
The next stock is Ford. We bought 9 shares for $9.36 each. We now own a total of 168 shares at an average price of $8.62 per share. Our total amount invested is $1,448.16. The current value is $1,573.32, making this a total gain of $125.16 or 8.64%.
The next stock is Iron Mountain. We bought two shares for $36.38. We now own a total of 39 shares at an average price of $34.28. Our total amount invested is $1,336.92. The current value is $1,418.82, making this a total gain of $81.90 or 6.13%.
The next stock is Medical Properties. Today we bought 5 shares for $18.85 each. We now own a total of 81 shares at an average price of $17.19 per share. Our total amount invested is $1,392.39. The current value is $1,526.85, making this a total gain of $134.46 or 9.66%.
The next stock is AG&C. Today we bought 5 shares for $18.14. We now own a total of 73 shares at an average price of $17.82. Our total amount invested is $1,300.86. The current value is $1,320.86, making this a total gain of $23 or 1.77%.
The next stock is Prospect Capital. Today we bought 13 shares for $6.61 each. We now own a total of 207 shares at an average price of $6.68 per share. Our total amount invested is $1,382.76. The current value is $1,366.20, making this a total loss of $16.56 or 1.2%.
And finally, we bought Main Street Capital. Today we bought 2 shares for $38.31. We now own a total of 36 shares at an average price of $37.46 per share. Our total amount invested is $1,348.56. The current value is $1,378.44, making this a total gain of $29.88 or 2.22%. Wow, so that's it. That is our update for April of 2019. I cannot wait till next month because I get so excited talking about these stocks. You know, the questions that you guys have are amazing. They are really driving the content in this series. So please keep the questions coming. We have a number that we are going to address next month, but we have so many that we're going to get to in just individual videos. So if you like this series, if you like this channel, please give it a thumbs up, subscribe to our channel, and join the journey.